In this world, nothing can be said to be certain, except death and taxes. Welcome back to my channel. My name is John, and just a quick disclaimer, this video is for entertainment purposes only. If you have any serious tax questions, please consult your local tax accountant. Taxes are something you never hear many YouTubers talk about when it comes to investing. I mean, that makes sense as people continue to chase stocks that they perceive to offer quick riches. The hype stocks, the SPACs, the day trading, the swing trading. But every single person that I know that has any sort of real money, taxes are always on their mind. Always. And that's why you see outside of politics, a lot of people migrating from places like California and New York to low tax places like Texas, Tennessee, Florida, and even Nevada. Now, when it comes to investing in the US, there is a huge tax benefit for anyone that focuses on long-term trading. And when I mean long-term, that means holding onto stocks for more than 1 year. It's not a coincidence that most of the most successful investors we know of all time are long-term focused for this exact reason, holding long-term and getting lower tax treatment. In the US, short-term trading profits can be taxed as high as 37% at the federal level, whereas the maximum tax rate that you will have to pay for any stocks that you hold over 1 year is no more than 20%. So at the high end, that's already a 17% difference in taxes for your gains. So just wanted to point out that this is one other reason that I tell people I like to hold stocks long-term, tax considerations. And of course, you're gonna have stocks that you are interested in or investments that you won't want to hold more than a year for various reasons. And for those, what I do personally is make these investments in my tax-free accounts. So for example, when I started my current job about 6 years ago, I basically invested all my swing trades in my 401k plan. So for the $19,000 or so I was able to put in the last 5 or 6 years, I've managed to turn this $120,000 or so to more than $400,000 without having to pay a single cent of taxes, or at least not yet, and being able to trade frequently and not having to hold stocks more than 1 year. These tricks of using your retirement accounts to do swing trading or to put in some of your highest conviction trades is also how Peter Thiel was able to get his Roth IRA up to $5 billion with all of that pretty much tax-free by making his investments in his early stage startups in his Roth IRA. So these are just a couple things to consider when you are making investments, concerning one, the tax implications of your individual situation and whether you can save money by holding stocks long-term to short-term, or whether you should be placing trades or trading frequently in your taxable accounts or your retirement accounts. And concerning these factors, understanding how tax works, at least in your individual location, state, country, could really improve your long-term returns. Hope you guys found this video interesting. I'll see you guys in the next one.